So the release of a deposit is the most dangerous special condition, I would say. And it's just simple as, let's say you paid 10% deposit and it's in the trust account, which is fine. But that trust account now is vulnerable because you've got an authority in the contract, so a special condition that allows the vendor to release that trust account so they can buy another property. Simple terms, yeah, sounds okay. The vendor needs to sell and buy. But when you really look at it, what if that 1% happened? What if it goes wrong? I always say to everyone, if it does go wrong, you have a chance of losing that deposit.
Welcome to Property Collective, where we share real and practical knowledge and experience about the Australian property market. I'm Ashton Jafarian, Class 1 licensed real estate agent in Sydney. I've been doing sales for the last 25 years, and together with my team, our aim has always been to assist the Australians who want to enter the property market, or they want to downsize or upsize, or they want to invest. Today, as always, I've got one of my very valuable key team players, Sana Sinai, with me. The other one, Jack Kushain. He's a conveyancer. He's supposed to join us anytime soon. He's always late to the appointment. I expect the appointment that he's going to be, having with his clients. So clients always get the first priority. That's why, we're always the second-class citizens for him. We never get the priority. He should be here anytime soon. Through this podcast, we basically want to simplify how real estate works by sharing the experience of the professional people who are living in this industry every single day. I hope you guys find this helpful and of value. Now, let me start with introducing Miss Sana Sinai, a good old friend of mine. She is the founder and the director of Rediscover Finance in Sydney. She's also a former branch owner of Bank of Queensland in Australia, and she's earned she's achieved fantastic achievements in this journey. One of the good things and the highlights I like about her is that being the branch owner, she knows everything in and out. She's not just a broker. She's not just a lender. Being in this industry very, very long, over a decade, and managing and owning a branch herself, she knows things in and out. So we rarely get brokers that they have previous experience working in the banking system. She's not only has that experience, but also she knows things in and out. She knows how the relationship between the banks, clients, applicants, customers, investors, lenders, everything works. So she quite often comes up with the solutions that not any regular, ordinary broker could come up with. Sanas, thank you very much for your time and accepting our invitation to be here. Could you please tell us a little bit about yourself?
Thanks, Ashton. Very excited for
Pleasure.
being here today for today's topic. I'm a director of Rediscover Finance. I am, as like you said, a former Bank of Queensland branch owner. I used to have 3 branches in Bank of Queensland.
Wow.
And
Not only one, just 3.
3,
Wow.
yeah, altogether 3. And now I'm just running my own company since last year. And like you said, me and my team in the finance team, we knows in and out about the finance lending. We are here to help the client with their customized solution.
Mm-hmm.
And let them help to find a proper strategy for lending and buying a property.
Oh, wow. That's fantastic.
Thank you.
And, our first episode actually, which is today, it starts with what the people should know before they enter the property market. From your point of view, from finance point of view, what is the most critical things that the property, like the people that they want to enter the property market should know? Where are the risks and what are the common mistakes?
I think first thing first, they need to know how much is their capability, what's their serviceability is to go and find a property, how much they can borrow from the bank, how much is their saving. There is few element in when you're going to buy a property you need to consider. One is income, one is saving, and they are just need to be together to be able to give you a good borrowing power and availability to purchase a property. So it's good to know how much you can borrow, how much is your saving going to help you, what's the other cost involved in purchasing a property. Rather than just saving, you need to know that you have a stamp duty on a certain property, and you have a cost like a legal cost and other costs like moving from this property to the new property. All those things you need to consider before going and looking for a property.
Yeah, as an agent, I've come across a lot of buyers that they're not prepared enough before they start to look at properties and what is in the market. And quite often they get emotionally attached to a property that they see and they inspect, they like it, and they show it to the family, and everyone is super excited. And now they want to move forward. And unfortunately, whether from a legal point of view or finance point of view, that is not the best decisions they're making. For instance, I had a client the other day, the one that you helped out actually, I think it was 3 or 4 months ago. They were not aware of the government scheme. And if they were going to just, have their own normal capacity as a normal applicant, they would fail to purchase the property. But with your appropriate advice, actually professional advice and, the government scheme, they managed to secure that property. I also get people coming, wasting the time, waste the agent's time. And by the way, I don't really want to deal with those type of buyers, because you show them the property, you go through everything, you send the contract, you give them the advice, you talk to their conveyancers and everyone. But then when it comes to settlement, before the settlement, well, sorry, the pre-approval wasn't good enough because it's just a pre-approval. They got the pre-approval like 2 months ago. Things have changed. The borrowing capacity has changed. The interest rate has changed. So these are all the things we experience in life every day. So if a client comes to you, what is the very first thing you would review or check for them? And, I understand every single case is different, but what is the most common thing?
When customer comes to us, first thing we ask for their income, how they are receiving their income. Either they are a PAYG or they are self-employed. So we ask for those information, how much they looking to spend on purchasing a property, what's the budget, what's the saving, what's their family situation is, and looking into see if they can get help from government through any of those government scheme. And then according to those information, we do the servicing and we give them the advice. It's very good to have a pre-approval when you're going to purchase a property. It's best thing that you can do. At least you have some sort of idea to know how much is your power, but it's not enough to sign a document. So my recommendation is when you see a property, it's, as I said, it's good to have a pre-approval. It gives you that confidence, and it gives you the confidence to your agent as well that you have a pre-approval, but it's not enough. So make sure that as soon as you see a property, you like the property, your conveyancer check the contract for you, let us know. We need to do the evaluation, because when you're getting a pre-approval, so many things comes in the pre-approval, like it's conditionally. One of the things is per valuation. So we need to do the evaluation, make sure it comes in a way that it has to come. And we need to tick the income verification and like account conduct. So as I said, having a pre-approval is good, but not enough.
Yeah, well, I as an agent, I would always prefer the buyers that they come with at least a pre-approval, because we don't want anyone's time, waste anyone's time. The vendor is obviously wants us to sell the property ASAP. If I receive 2 similar offers, or maybe one slightly higher, but the lower one comes with the pre-approval ready, I would always go with the one that's got the pre-approval already, and that's the one I would recommend to the vendor, because we don't want to take risks. We don't want to burn this buyer who's ready to go because the other buyer is promising us something which is not guaranteed. So that's very important.
Okay.
And a common mistake from my side is that lots of buyers, they think offering the highest price would secure them the property, which is not the case. We as agents, and obviously we have to transparently communicate everything with our vendors, we prefer a more secure offer. So yes, Mr. Buyer, you might offer us something lower, but because you've given us the 66W, which is, no cooling off period, so we know there's no mucking around, you are ready, you are serious, and you're ready to put that 5%, 10% deposit. And most importantly, you've got the pre-approval. It ticks all the boxes for me. So even you offer me $20,000 less, I might take it to the vendor and say, look, this is a secure deal. You might not see this, serious buyer anymore. This is my recommendation. So not offering the highest price is always securing the property. That's the common mistake that people actually do.
Exactly right. And I often advise my client that when they have a pre-approval, tell their agent that my financial is ready. That gives them more power to secure the property. This is one of the actually advices I give to the client. Plus, don't always go with the higher offer because that's not going to help most of the time. The agent knows that you're financially ready to move and go ahead and secure the property is the best thing to tell the agent.
Well, a fun fact is that researchers show in Australia, one of the most overwhelming and stressful things is to purchase a property.
Exactly.
And imagine you walk into that process without being prepared. That doubles, triples the stress. So I think being prepared makes the whole, everything, the whole picture easier for everyone, the agents, the buyers, the sellers, and, it would make the whole transition a bit smoother. And at the end, it helps you getting a better deal. As an agent, again, I love a clean contract. I hate dramas. I love security. I want something that could be guaranteed. So yes, this would be my advice to the buyers. Just get ready, get prepared, do your research. Before you do the research, please, don't enter the market. Just get everything ready and then start looking. Because if you're not ready, you're gonna keep losing the good deals. And I hope this doesn't happen to anyone, but I've seen so many cases like this. People even lose their deposit, the 5%, 10% deposit. The saving, they've worked really hard all their life to save. And it goes like this. So the only way to eliminate that risk is just to be prepared, do the research, talk to the professionals early enough before you make any decisions. And then, you're very well aware of, your capacity and, your buying power and what you want. Yes, then it's okay to fall in love with the property that you like the most. The other thing that I have experienced a couple of times, and I want you to elaborate on that. People get approved for a certain amount of loan. And they put all that into purchasing the property. But we know, we live it every day, that that's not all the money they need. So, yes, okay, you pay this much, like you pay, say, $1 million to purchase this house, but you need more. Can you just explain a little bit about the common mistakes in that area? What are the costs that usually the buyers tend to forget?
Like you said, there is other cost involved when you're purchasing a property. Like what I said before, definitely there is a legal fees. There is a lender's fees, which is common in all the banks. It's not different in any banks unless you are having the second tier banks. It might be a little bit different. But then you have to think about if when you want to move from this existing property to your new property, obviously there is a removal list fee that you have to consider. You have to have some buffer in your account. I always tell them for just in case. You don't have to empty your account to just get into that property. Just leave a little bit of buffer. It's like what you said, purchasing a property is one of the big decision that you're making in your life. And you need to do it
Sometimes
properly.
the biggest.
Sometimes the biggest.
Yeah.
You need to do it properly. You need to be prepared for it. You need to think about it, and then go and enter to the market, not emotionally. Okay, I like this property, I have to go and buy it. Those emotions sometimes cost you a lot of expenses.
Oh, yeah, absolutely. It's I've also noticed people even tend to forget, as you said, the moving cost, the removal cost. It could be a lot. So if you're moving from the other side of Sydney, like from north to south, and got lots of furniture and stuff, that's gonna cost you a few $1,000s easily. The other cost, which is very hidden, I call it adjusting and adapting costs. So you go to a new property, you might need to do some renovation. You might need to get rid of some furniture and add some stuff, because it's usually, it's not exactly the same residence you lived in before. It could be a downsize, it could be an upsize. So it's always wise to leave some money in your saving, because you don't know what is happening. If you're a business owner, or if you're a sole trader, or if you're on wage, things could change. Interest rate could change, which we've recently experienced quite often. And here is Jack. Well done. Okay, our late comer. Yeah, take a seat. All right, guys. Now we have the privilege of having Jack, our late comer. Again, as I said, he always puts clients first, and that's why we always get the second priority. Okay, well, he's got no hesitation in stating that. Jack, for the people who haven't met you yet, can you tell us a little bit about yourself?
Okay, so my name is Jack Kosh Ayan. I am a conveyancer licensed in South Australia, New South Wales. We were one of the first firms to go digital. As they know, we've been doing this since 2018. Basically, we've always had a client first serve focused approach. And what that means is that I'm always there dealing with the client direct. And I'm never using an admin, a paralegal, or anyone that's a junior to take over your matter. We've settled over 3,000 matters now across South Australia and New South Wales.
Well, that's amazing. Very impressive.
Thank you.
So you're not only servicing New South Wales, but South Australia too.
Yeah, we used to do Victoria, but we got too busy.
No. That's expectable. So Jack, I started the conversation today with Sanaz, as you know. I'm sure you're aware of this, that this podcast is more for the people who want to enter the property market, and we want to simplify things.
Yeah.
So just make sure they're protected. They can, they don't have to deal with risks and stuff. From your point of view, from the legal aspect of it, what are the risks and what are the main things that the buyers should be mindful of, and what are the most common mistakes?
Well, it comes down to what you're purchasing. So first-home buyers could be someone foreign that comes to the country, and they might have money to buy something 2 to 3 million. So it comes down to, do you understand what house you are purchasing? Then you've got first-home buyers that literally are just buying a piece of land, and they don't understand the land and home package concept. And I've had this conversation with a lot of them, that you need to understand that if there's a land involved, you will basically put the land into your name, which makes it one document, and then there's a construction. So people they don't know how to distinguish between what's a land and home package and what's a off the plan completed house package. Mm-hmm. So that's when what you want to do is you want to get the contract checked straight away. You don't even want to negotiate until you know what you're getting yourself into. And throughout the years, I've had many contracts not go ahead for clients because it was too favorable to the vendor. It was too dangerous. There was too many risks. And even in South Australia, where the agent prepares a contract, you have that issue. So, the agent says, "Oh, it's all right. I prepared it. I'll have a chat with you," but that never works. There's other instances in New South Wales. They go, oh, the contract looks pretty easy. It's straightforward, but you don't understand the special conditions. And without getting the special conditions amended, I would never enter into a contract.
Well, a fun fact about the Australian property market is that the majority of the people, the majority of Australians, spend more time researching the end of the year holiday or buying a new car than understanding the contract for the sale of the property they're about to buy. And that is very, very high risk. Jack, what are the common special conditions in a contract? I know each contract is different and each sale is unique, but what are the most common ones?
One of the most common that's pretty much in 99% of the contracts as a special condition or additional condition, they call it, either or, it's the release of deposit. So the release of a deposit is the most dangerous special condition, I would say. And it's just simple as, let's say you paid 10% deposit and it's in the trust account, which is fine. But that trust account now is vulnerable because you've got an authority in the contract, so a special condition that allows the vendor to release that trust account so they can buy another property. Now, in simple terms, yeah, sounds okay. The vendor needs to sell and buy, but when you really look at it, what if that 1% happened? What if it goes wrong? And I always say to everyone, if it does go wrong, you have a chance of losing that deposit. And it could be the simple fact of, all right, I've said okay to the release of deposit. The vendor releases a deposit to buy a house, but then on the house that they're buying, there's an issue or their finance collapses. You don't know the vendor situation.
Yeah, so how making our agents' jobs hard because I've dealt with, I would say, probably 5 out of 10 contracts that they come to us. It's whether it's a downsize or upsize, the existing owner of the property or of a vendor needs to have that option to release the deposit and purchase their other property. And most of the time they favor a simultaneous settlement. So by taking that away from them, I think most of the vendors would be having a hard time.
Yeah, you say that, but the vendor can just get like a bond. Those power bonds or whatever they call. They can get a bond.
Deposit bond.
Deposit bond.
Oh, so that's the solution.
There's so many different solutions for a vendor now in regards to financing, which Sonos knows more than me. That it's not going to be a deal breaker. The problem that a lot of people have, and I've been seeing it, is that the vendor or the purchaser doesn't actually understand the condition. And recently, I've been trying to, because the market's obviously not as great as it was, I'm trying to really assist my clients to understand. And if they understand and we've ironed everything out in the pre-contractor stage, then at least when we're going ahead, they can be like, yes, I want to go ahead. And if they say no, it's a genuine reason. So by saying that, it could be like the vendor goes, oh, no, I need to release a deposit because I have to buy a house. But if I'm acting for the vendor, I'll be like, look, there are other options. Are you sure you want to lose this only purchaser? And so I think we had a matter recently as well. And I tried to, I guess, keep it alive. And it did be kept alive. And the client was happy and they all purchased, the vendor and the purchaser. But it's one of those things that the vendor and the purchaser really need a good conveyancer to sit down and talk to them through the conditions, through everything. And obviously there to be options. And I'm feeling like lately that's not happening. And that's why you're getting a lot of deals collapse.
Most of the conveyancers I've dealt with, they're too busy. Even sometimes we need to talk to them urgently. It takes a day or two till they come back to us. So not everyone is just like you. I know you're available 24 hours. You've got no life. But that's a rare thing. And trust me, I've said this before. Y'all have heard it. We agents lose the deals. Buyers lose the property they want to buy. And vendors lose buyers just because the conveyancers don't come in soon enough, or when they come, they don't act properly. So you need a professional conveyancer here to make things easier and risk-free for everyone. for everyone. So if a buyer has got a good conveyancer, it makes things smoother and easier for me as the agent and for the vendor as well. Well, we are lucky we have one of them in our team, but yeah, it doesn't happen very, very often. So let me ask you about the other common special conditions, like 66W is one, the one we hear a lot, conditional, unconditional, also settlement terms, cooling off period. Would you like to just
elaborate? Yeah,
a little
sure.
bit, yeah.
So there's really no special condition about 66W. It's just a cooling off certificate.
Yeah.
And what that is that it waives your cooling off rights, which is very dangerous.
Objection.
Yeah, I know.
So I believe if a purchaser or a buyer has already done proper research and they're aware of their capacity and what they want, what they don't want, and the risk in the contract, 66W is actually a very good thing. Because as I explained before you join us, there have been so many occasions that I put an offer, which is not the highest in numbers, in front of the owner, and the owner has happily signed it because they know it's going to happen now. The buyer is serious. They've done their research. There's no comeback from it. And that could actually work in the favor of the buyer as well. They can get the property possibly at a cheaper price. But yeah, I understand it comes with risk as well. But yeah.
I agree 100%. So, 90%. I agree. and the reason I agree is I've used the 66W method to get big discounts. So I know it works. But it's one of those things that you're putting yourself into a huge risk if you're not a cash buyer. Because if the bank, and especially in this economy, some of us know this, if the bank does a valuation and there's something that is out of the norm that they don't like, or maybe it's just zoned in an area that they just won't touch it and you're limited, there are times that maybe no bank, it's very rare, Sonos knows this, but there are times that maybe no bank touches it, right? And what happens is that if that many of the banks don't touch it, your resale value is going to become problematic. And I've had this issue myself personally. So I always say, well, yes, you could get a discount of 10 grand or 20 grand or 100K, 200K. It happens. I know what you're talking about. But if your finance is not approved, you're going to lose that 5 to 10% deposit.
Absolutely.
And in this market, I haven't seen many 66W. It's very rare. But yeah, in a very hot market, you really don't have a choice. Like if you don't have a 66W, as you know, in a very good market, no one's going to touch it.
Yeah, but even today that the market is the buyer's market and properties are not moving as fast as a few months ago, still, if someone comes to me with a lower offer and 66W, I prefer that one.
Yeah.
And I don't think it's really hard to assess your finances before you walk into this.
Can
you
I
just need to be
add
prepared.
something?
Yeah, sure.
Sorry. You can have a pre-approval before you go to W66 auctions. And that's what I always advise as well. As soon as you see the property that it is has that condition of a 66W, first thing first, you need to talk to your conveyancer. You need to get your finance ready. And then even I can give you some sort of idea how much that property would be in the market. I can get a property report for you. So it's just a matter that you be in contact with your conveyancer and your financer. Then you should be okay. And some of the banks even do fully assessed of the pre-approval if you want to go to the auction. So you just need to let us know and be in contact with us.
Mm-hmm. So if a buyer has got an intention to purchase a property, they're considering it seriously, and they've been advised that 66W would be okay, they just need to let you know, and then you can tell them, can you make that conditional pre-approval unconditional? Is it a case that...
It always gonna be condition approved because we don't know the value.
Mm-hmm.
That condition will stay there till the contract gets signed, and then we can order the valuation. But at least the rest of the things being verified, like income verification, account conduct, and those sort of things. And when we get the property report, it's a very minus chance that the value doesn't come up, unless it's very, very different from the market. Otherwise, it should come up with the price of the contract.
Mhm. Well, what are the other things in a contract that we can, it could possibly change, say, be a game changer? For instance, I'll tell you something. I had a client, we had a buyer purchaser who was considering to buy a property to build a granny flat on it. And this property had a massive unused land, probably 80% of the land wasn't used. But because of the easement and the sewer line, both on the same land, council would never permit them to build anything there. And this is something that was very obviously shown on the contract. Do you think, well, if a buyer is buying a property for a specific purpose, they should discuss that with their conveyancer? So just look, this is my aim, this is what I want to do. Can you check the contract for me and see if this property aligns with my goals?
Yes, 100%. Never go off the listing that you guys put, because even at the end of it, you say, do not trust our listing content. So
okay, all right,
so,
I'll come back to that.
Yeah. So well, maybe not Ash, but a lot of others, they do put like, it can have a granny flat and all this stuff, but it really can't.
Subject to council approval.
Yeah. So the subject to council, as you know, is pretty heavy, like statement. And the reason I say that is simply if there was a bushfire prone land, if the BAL rating is above 19. So there's different BAL ratings, 19, 29, fire zone. If it's above 19, you have to get DA, from what I know. And that means you can't get CDC. DA means you got to wait 6 to 9 months or more, and maybe you can't even get it. So if I have a client, wanting to buy a house to build a granny flat, and they want to do CDC because it's the quickest method, then we would have a look. We would contact the council. We would tell them to get an architect, just a little simple stuff to at least verify that it's possible. But yeah, your question about, I guess, if they wanted to build anything or do anything, yes, you do need a conveyancer to check everything, and also to speak to your local council.
Okay. Sanas, if you want to just give one takeaway for today, one short takeaway for the people who are planning to enter the property market, what would that be?
Just think first, talk to your conveyancer and financer. Don't do anything without having a discussion with them, and be ready.
But from just purely finance point of view, what would be that?
Be ready on the finance as well. Just talk to someone, to your broker, to your bank, whoever that you like to go and talk to, and make sure that your plan is working. Mm-hmm. You are able to borrow that much, and your saving and everything is aligned.
Okay. And what would be your takeaway for today?
My takeaway would be, before you jump into any agreements, before you even go into the market, to be honest, have a chat with a conveyancer, with a broker, even with the real estate agent. Just a quick chat. Oh, how's the market going? What do you think these prices are going? Speak to people before jumping into just that one transaction, because the more you know, the better it is. And I don't mean like jump on ChatGPT and just, be like, this is what do you think? And then you get like the same answer that you're thinking. Genuinely go speak, have a coffee with a broker, a conveyancer, a real estate agent, just to understand the market. Because the last thing you want is to rush. I always say, have patience, don't rush, and go to auctions. That's one thing I learned when I was buying a lot of property, is I always say go to auctions. And because when I was selling in a bad market in 2022, I realized that if you go to an auction, you understand the true value, because you are the market standing there listening. So go to a couple of auctions. Don't listen to what sorry about this, but the agent told you online. Just go to an auction and just sit there and listen and see, is it actually selling for that? And don't just go to one very good, like great vibes one. Go to like, I don't know, 5 or 6. Or speak to or call the agents, get to know your local agents and find out prices as soon as you can if you don't have time. But do your research. Don't just jump the gun and just go, oh yeah, this is it. I'm going to buy this one property. 9 out of 10 times you'll regret it.
Yeah, well, thanks for that, Jake. From an agent point of view, I'm not Well, I have to agree what he said, but yeah, we've got good agents and, you know.
Of course.
So we still have lots of trustworthy agents in the market.
100%.
So they take pride in what they do and they provide professional services.
You're one of them. So it's
Thank
good.
you. Thanks for the compliment. So my takeaway for today would be, guys, real estate is a long-term game. It can't be emotional. If you check the history of the property in any of the capital cities in Australia, it's always shown growth long-term. We might have market fluctuations today, interest rates, new federal budget, whatever that is affecting the market, but long-term game, it is always showing growth. So you can't make an emotional decision for something that is a long-term game. Be prepared. Preparation is the best strategy, but don't hesitate. I know lots of people, lots of buyers. One of the most and the biggest regrets is that, well, why did we enter the market so late? Why didn't we purchase a property 3 years ago? We just waiting for the perfect moment, perfect timing. Perfect timing never came in. It's not about perfect timing. It's about time to be in the market. Just be in the market as soon as you can, if you are prepared enough. Ladies and gents, thank you very much for today. I hope the people who watched us found this of value. Stay tuned. We come back soon with the second episode. We're gonna discuss more exciting and in-depth concepts about the real estate and property market.
Thank you.
Thank you.
Thank you.
Thanks.